Hey guys, welcome to the fifth and final video of the short series of Introduction to Trading on Crypto Charts for Beginners. Just because it's the final video of this short series doesn't mean it's the final video, and we'll keep on doing more educational content, including getting further into more trading tips. So as a recap, in the first video we just gave an introduction to what are you seeing on a crypto chart and why people use them, why people use trading charts. And then in the second one, we talked about moving averages. In the third one, we talked about MACD. And in the fourth one, we talked about RSI. Throughout all these videos, I mentioned backtesting and simulated trading several times as a way to try to use these techniques yourself without actually using money. It's a good way to learn and understand, get a better idea of all of these concepts rather than just watching the videos and thinking you get it. It's good to go look, try to make sure you actually get it before you jump on to real trades. So in this video, I'm going to talk about how to actually do backtesting and simulated trading. So let me begin with a little introduction on two fronts. The first is that what I'm going to do in this video is very simple form of backtesting. In fact, one might not even call it backtesting. It's more like just looking back to try to spot the things we mentioned are worth taking note of in the previous videos. Backtesting can get really complicated. It can go from looking back and then marking down what you would have done on paper and then calculating the profit you would have made, or finding some software that allows you to backtest and automatically input these trades on past price movements, or in that same software even making more advanced trades. And backtesting can even include doing your own programming and getting really advanced. So backtesting is something that if you get really into trading, you're probably going to keep doing for a long time because its complication can continue scaling along with your own better understanding of trading. Simulated trading is the same, although of course if you become a real trader that's trading real money, simulated trading is working with the current market. So if you're already putting real money in, then likely you'll stop using simulated trading as much unless you just have some crazy idea you want to try out but not much confidence in it and you just want to see what would have happened. But simulated trading is great for whenever you're learning to trade at the beginning. The second aspect I want to address is really short overview of sort of pros and cons of both backtesting and simulated trading. So some pros of backtesting is that you have tons of data to work with because you can find the historic chart data for most whatever asset you're looking at trading, going back to the beginning of when that asset was trading. So there's tons of data to work with. So you can go back, find all kinds of different market movements to test your trades through. One drawback to backtesting is because all of the data is already there, including the later data that you would be closing the trades on, you run the risk of over-optimizing your strategy to the data that already happened in the past and making it sort of realistic as an expectation for future price movements. And of course, that's where simulated trading comes in. A drawback of simulated trading is it's real time, so you can only trade on what's happening right now, but you're just not trading with real money. But the positive of that is that, again, it is what's happening real time, so you don't really run the risk of over-optimizing your trades unrealistically because you don't know what's going to happen next, so it's much more like real trading. So let's jump into a really simplified example of backtesting. Like I said, less like backtesting, more like back studying, let's say. But you can develop this and get it more complicated as you learn more. Anyway, let's jump in. As I said before, all you need to backtest is historic data of an asset. So since Phemex has the trading charts, you can just click up here at markets, then we'll do BTC for now, click trade, and this will bring you to the real trading area, but we're just using the charts to backtest. So over here you would do your trade. Instead, we're just going to open up the chart full screen. To find the indicators, you can go here, and then you can just start typing in whatever you want to look. So I had typed in moving average before and brought it up here. Just to show you that, let me X out of the one I had up. Here it's at 9, it's a 9 moving average. The one we were talking about was 20, so I'm just gonna go ahead and do the 20 so we can look at it. So here's your 20 moving average. And this is the current market. This is the latest candle on the 1-day candles. So this is today. But we are backtesting, so we can just drag back into the past. If we want to go further back, we can zoom out and go over here. All right, let's look somewhere in here. All right. So one thing we mentioned with moving averages is sometimes it can help you tell when trend is losing momentum. So you can look here, the price is way above the moving average, and then you find a place where it's come back down to touch the moving average. So that's why if you're using this method, often you wait until it fails a second test to get a stronger signal. So here it crossed, and then it tested and fell down, but then when it tested again, it broke back through. So we can see if that happens again later on. Here it crosses and then breaks back through. Here it tests the line, but then goes back up. And then this in real time would have seemed as another test, but since we have all this info already, we can see the test failed and it continued downward. And if we move forward a little bit here, you can see there was a strong downtrend here as the price was very far under the moving average. And then it sort of got close to the moving average, kept a little bit above and below, just not much difference there. And then you can see, if you imagine that this was live, you can see here it suddenly gets quite far above the moving average, which means that the momentum is pretty high. Maybe you would have made some longs there. And in this particular case, it would have been a good choice, as you can see. Of course, you would have wanted also to have a point where you were selling or a signal you were watching out to sell, but those are more things you'll learn later. If you're only looking at it to find the strength of the trend, then you could theorize some strategy in your head. Let's say anytime you felt a trend was strong because of the distance from the moving average, then you would long or short depending on the direction of it, and then you would sell whenever it crossed the moving average again. If you had done that here, once the trend seemed strong and then waited till it crossed, you would have done pretty well, as it would have climbed quite a bit and not crossed until it got all the way up here, which means you would have bought at maybe 35, sold at maybe 46. So that would have worked really well. Again, I'm keeping this really simple. Usually you'll want to actually write down the numbers and find out exactly what you're doing rather than just eyeballing the chart. Now we'll start from current time again, and let's use another concept that we learned in the moving averages video, which was using the 20 and the 50. So we already have the 20 up. We can go ahead and turn on another moving average and set it to 50. So again, go here, go edit. Let's change this to 50. All right, now let's go back in time. Also, let's edit this so that the 50 is a different color. We'll make it orange. All right, let's pick some place to start. So here we can see it's ranging for a little while, and that the moving averages are pretty close here, and then they finally cross. So this 20 is crossing below the 50 where it was above before, and then we get a strong downtrend that's quite far under both of the moving averages. So if you had looked at this crossing moving average as a signal that the market was going to make a change, then it would have worked out pretty well here. But again, we're looking in the past and cherry picking, but it's also just a way to go see some examples of the concepts, visualize it, see how it played out in the past, just build up your understanding before actually making up your strategy. Then we can see here the difference between these moving averages is pretty large, so that's some indication for a strong trend. But now we see the price starts picking up, So if you're only looking at the 20 moving average, then you would have seen that the price is far above the moving average, and you would have seen that as momentum. But with the two moving averages, you would see that the 20 got close and then crossed over the 50, which is another indicator of that stronger upwards momentum. So here that would have been correct, and if you had gone long, it would have made a lot of sense. And then here you had a big drop. It started getting closer, but you wanted that to be more confirmed, and then it was as the moving averages moved closer together, and then here it crossed. Then suddenly the price breaks back up above both moving averages, and it was not actually a long downtrend. But then here we see the 20 moving back above the 50 with the price way above both of them, and that once again did indicate a strong uptrend. So again, this isn't really backtesting in the sense that I'm not telling you exact strategies that we're writing down and calculating. That's something that you can do, but right now I'm just trying to keep it really simple to show you the concept of backtesting, to get used to looking back and spotting what you've learned so far, and then as you go on, as you get more comfortable with that, you can start actually writing down the real numbers, what you think you would have tried trading, to see how it would have worked out in the past. All right, let's do MACD. So we'll get rid of both of these moving averages and throw on the MACD. There it is. All right, in the video we had the signal line as gold, so let's change this one to some form of gold. There we go, looks better, right? Back here we can find an instance where the price made a higher high and the MACD made a lower high, which, as we learned in the video, can be a signal that the trend is weakening. So if we look what happened, it was in fact weakening, and it did not go back above that high and entered into a downtrend. Again, if you just do what I'm doing now, then it's very cherry-picked, but it's a way of studying to get these concepts in your head, make sure you kind of understand it. But you should always be asking the question, is this enough for me to work on? And usually it's not, so think about how to actually be able to incorporate it into successful trades, and that's why you want to start thinking about, okay, how would I use this if I was trading in this time? Pick how you would use it, write down when you would have bought, try to keep it realistic, write down when you think you should sell, and then see how that works in the past. I'm just trying to not take too long, just kind of show you the basic idea of backtesting. Now let's turn off the MACD for now and pull up the RSI. Relative Strength Index. Yes, thank you. All right, let's go back to the beginning of the year and try to use RSI as buy and sell signals. Selling when it's above 70, buying when it's below 30. So at the very beginning, it's above 70. So you think, let's sell. All right, the price basically goes sideways depending on where you had done it here. This is obviously cherry picking because it was oversold for a long time. If you were only going by that, then you would have done it here and it went up for a long time there. So let's find the next one. All right, here it's oversold again, and once again we get the problem that it was actually a strong trending market, so it just remained oversold for a long time. This is one of those instances where you want to be looking at something other than just RSI to make sure you're not trying to sell because you think it's oversold, but really it's just a trending market. So let's go to the next one. Here it peaks above, and let's say you want to go short because it's oversold, and you want to stop your trade once it goes below the 50. You would have done all right. If you started your trade somewhere in here and then it went under the 50 and ended your trade somewhere here, you would have had a successful short. So in this instance, it would have worked alone. All right, now it touches the 30 here. So let's say you go long because you think it's going to go back up, and then you want to sell once it goes above the 50. That would have worked as well. You would have bought somewhere here, sold somewhere over here. Would have been great. Now ranging again, breaks below 30 again, so you want to buy again. It would have not worked so well, right? If you had had some other indicator and you decided to close it in here, you could have broke even or made a little bit of profit, but going on RSI only wouldn't have worked that well. Now we're all ranging inside 30 and 70 again, and we break above 70. So you went to go short. Depending on what sell signal you had, it could have worked out as the price did decrease, but if we were going by that really simple one I said earlier of waiting until it hits 50, then you would have not stopped your short, and then the price kept going up and kept on breaking the 70. So it just was a strong uptrend in the end. So let's say you had started it here, breaks a little bit. If you had gone short, would have been a very bad choice. But let's say you waited for this stronger signal to buy as it broke far below the 30. Let's say you went long and you wanted to sell at the 50. Then depending on where you started and ended your trade, that one definitely could have been successful. One more thing you can do that we haven't talked about yet is using multiple of these indicators that we already talked about together. So you can actually use RSI along with the MACD. Now, this video isn't about RSI and MACD. I just wanted to show you that you could turn them both on. And basically, you can go back and look for indicators we talked about in the MACD and in the RSI, and then try to find times where they're both indicating the same thing and see how well that would have worked out in the past. That's my homework for you. Again, you can get more complicated with this backtesting, actually deciding exactly when you would have bought and sold beforehand, and then calculate the profits or losses you would have had and think about how to adjust. So here's a fun activity for you to try. Look back at the previous videos, try to learn all of the indicators we talked about when looking at RSI or MACD, find the times whenever they're both saying the same things, and then see if you would have had profitable trades in your back tests when looking at both of them and seeing when they agree. Now, real quick, I want to make sure you know how to use the simulated trading, which we do have available on Phemex. Again, this is real-time trading, but just with fake money. So let's hop in. From the Phemex homepage, you're gonna go to Learn, and then down to Simulated Trading. Although don't forget that there's the Academy here to learn more about technical analysis. If you've gotten everything you need from these videos, you can check out the other videos about it, and you can also go to the Academy, learn other technical analysis, then go do backtesting and simulated trading with what you've learned. Anyway, here's the simulated trading down at the bottom of the Learn area. You'll be brought to Phemex Testnet, and then you can go to Testnet Markets. And we've been doing BTC, let's stay on BTC. All right, and let's look through the indicators we've talked about, see if we can get anything to make us know what kind of trade we want to make. Let's go to the daily candles. I have the RSI on. It's in the very middle, so it's not indicating anything for us right now. So let's get rid of that RSI. Let's do the MACD. All right, we can see the signal line had crossed over the MACD line, but now it's back below. It was just ranging, still pretty close, not getting any super strong signals there. So let's say bye to the MACD. Let's pull up a moving average. Change it to 20. All right, it's also just sort of in the middle of the moving average. Let's do a secondary moving average. Set this one to 50. All right, everything on these long-term daily candles is all really close together, all indicating a sort of a neutral, sideways trending environment as far as all of the indicators we've looked at. Let's take a look at the 3-hour candles, even though the indicators we've talked about so far have been more of the long time frame. I just want to get some idea of a trade to put in based on indicators we've already talked about. All right, here we can see that the 20 has diverged quite a bit from the 50. And it crossed over relatively recently. So, you know what? Let's just go ahead and long. Oh, you know what? I'm in the spot market. Let me change to contract. All right, so now that we're in contract, let's go ahead and place an order. Here you'll enter the quantity. One contract is $1. So $198, which is going to be 0.0048 BTC. And then we'll buy long, not using leverage for now. And here we can also set to take profit and stop loss. This is just something you can add for it to manually stop your order at certain prices. So since I don't think this is a very strong long signal right now, even 25% seems a bit high. I'm gonna go ahead and do 10-ish%. So right now it's at 40,592. Let's just say 45,000. And then the stop loss, we'll set it at 10%. If it goes down to 36,877, then it'll go ahead and close the order and we'll eat those losses, but at least we won't get more. Then we'll say confirm. And now that order is sitting there. And we'll see if it works. Again, this is live, but it's in the test net. So if we lose money, it doesn't really matter. We learned from it. I'm gonna just use my phone to give a quick update on that simulated trading order because I know you're on the edge of your seats. Here I'm back on the test net and you can see this was that order and it has been filled. So it was successful. Now I'm checking my P&L, closed P&L. This top one is that latest order that I just did in the video. And you can see, whoa, realized P&L 0.00012,403 Bitcoin. I know this is super exciting. You've probably never seen anybody make 0.0001 Bitcoin of fake Bitcoin in simulated trading before, but there you go. All right, guys, I hope this helped you understand about backtesting and simulated trading. As you can see, the advantage of backtesting is you have all of that data there already, and so you can just see how any strategy would have worked, spend all day on it if you want. Again, watch out for over-optimizing for the past because that exact environment probably isn't going to happen again. But if you're keeping your strategies pretty broad and simple, then that'll help you hone them and then help you make them better theoretically for future price movements. And then there's also simulated trading. It's good to do both of those. You can do them at the same time. Go ahead, see if you see any indicators on the current price action based on any indicators you've learned so far, and place some trades in the simulated trading because you're not going to lose any real money. And then since you need to wait for those trades to play out, go ahead and place them. And then on whatever more time you have to spend learning trading, you can go pen and pencil or on your computer, do some back testing, trying to develop your strategies, get a better idea of all of the indicators you've learned by going back and seeing how they played out in the past. And of course, continuing to learn about more indicators and trading techniques. All right, guys, that's it for this 5-part beginner introduction to crypto trading with the charts. I hope you guys enjoyed it, and I will see you guys next time. Thanks for watching.